Happy Monday, everyone. Just as a quick note, I forgot to mention this on Friday. I've been forgetting to mention a lot of stuff lately, so I'm going to try to make sure I get all as much of this as possible out. So I'd mentioned that we might be covering 12 and 13 today, and we'd be moving up homework onto Wednesday. I decided not to do that. I did not hear if we were going to have a presenter, and I'm just assuming that we're not going to have a presenter next Wednesday. And if Dr. Caden tells me otherwise, then I'll be in panic mode. But I assume that we're just going to be going on a regular schedule, so there's no change to the schedule currently. That being said, I do want to remind you of a few things. So we're going to do chapter 12 today. We're going to do chapter 13 on Wednesday. These are both very short presentations, so we probably will leave a little bit early on both days. And so, yeah, these are much shorter in context to the other chapters. Then we'll do homework for chapters 12 and 13 on Friday. It's also a short homework assignment, so you guys get a little bit of a break. It's just not as much content to cover as revenues and purchasing. Next week, we will do the financial investing processes. So we'll do 14 and 15 on Monday. We'll do chapter 16 on Wednesday, and we'll have our final homework assignment next Friday. So yeah, there's that to look forward to. I did mention this earlier in the semester, and I want to remind you, I actually have a separate research project that I've been working on, and I'm going to be out of the classroom on Monday of next week. Simply because I can't be two places at once, and the classroom I need to be at is over in 1432 right now. They meet that on that day on Mondays. So I'm going to record the chapter 14 and 15 lecture for you all to watch, and I'll post it on YouTube. You do not have to do that during this course period. You can do it whenever you want, but you do have to watch it because that's part of the presentation of the course. I will have that recorded and fully posted sometime later this week for you all to view. If you really are just insistent on it, it's like, Dr. Barnes, I need it before you can record it. I'll just send you the link to the lecture that I recorded last year at this time of that class session. It's going to be identical to that, but I plan on recording a unique one just for this class on YouTube. That's my plan. Yeah, so there's that. There's a few things I want to make sure a reminder of. One of the big reminders that I wanted to make sure you note of and make note of. Obviously, we talked about the group projects and some of the responsibilities of that. I'm not going to flash that up again, but I will go ahead and talk a little bit about another project that's coming up on Friday. Your Excel assignment is due. So I wanted to reiterate the instructions, and the instructions are basically listed here on Brightspace. Please make sure that you have any questions. The project, me and my GTRA, he's handling kind of the issues that are being run through. If he runs into a problem and can't answer your question, he'll contact me, but he's the one who's responsible for organizing all the information, so he should be able to answer your question pretty expediently. That's his contact information there. Just as a reminder, I don't know, this always comes up and it's always just kind of people miss it. On the assignment link in Brightspace, there's an example file of what I would like for your Excel file to look like, okay? And so this is basically a setup of the income statements, the balance sheets, and then each of the examples of being run. So a few things to note about this, all right? If you do it exactly in this format, you'll be fine, okay? This is exactly the kind of thing I'm looking for. It doesn't need to be perfectly like this, but you will notice that these financial statements are very heavily edited. It doesn't contain all the information that's in Morningstar. I do expect you to do some editing. And keep in mind that you can't see this on this because it's a PDF, but if there's something that's a function of two other numbers, like for example, gross profit is the sum of total revenue and cost, or the difference of cost or total revenue and cost revenue, you do need to include a formula for that. You can't just leave the number like that. You do need to do the calculations. Yes.
And you do want us to upload it as an Excel file right now, PDF.
The reason I don't do that is because then people would just use that as the template, and I want you to do the work on your own. That's kind of the whole process. So I have thought about that, but yeah, that's more of the reason I do the PDF. So for that. Also, when you get down to the critical thinking assignments, this is pretty straightforward. This is just formatting, and I do great on formatting for these presentations. It does count in the score. When you get down to the ratio analysis, don't just copy the ratios that I use here. Make sure that you think about what ratios are relevant to your industry and your companies that you're using. This is a particularly important one because we talked about current ratio and debt to equity ratio and gross profit margin. Those are generally good, but if you're in an industry where current ratios don't matter as much or liquidity doesn't matter as much, then don't use liquidity ratios. If you have a company where debt to equity is a little bit spurious of a measure, use those. Make sure you can justify all your explanations. Some areas you might want to focus more on inventory because like a retail company would have more measurement of inventory. So you might want to use inventory ratio. If you're in a service industry, don't use an inventory ratio. It's a bad idea. So those are all examples of that. And then, yeah, you can kind of see the diagram that's set up here about everything that's set forward. If you have questions at the basic level, talk to my GTRA. If there's any problems that can't be addressed, I will step in and I will address those. Most important things, the one I've been saying all along, do not wait till the last minute to do this. This takes more than an hour to do. We did have had students in the past who tried to do this then right before class, that tried to wait till Friday right before class when they did their normal homework assignment. They did not complete this assignment. Okay. You will not complete the assignment if you wait till Friday afternoon to work on it. It's just not possible. It's not a difficult assignment, but it does take some time. So please start working on this now rather than later. Yeah, so that's an important one. And so, oops, I don't know why it keeps defaulting back there. I said I wasn't going to show student names, and then it keeps scrolling down to the bottom and showing everybody's name. So I apologize for that. The good news is it won't be on YouTube forever. So, yeah, I don't know. I still have got that fear. Was anybody in my AIS course when that cyberbullying incident occurred? So yeah, okay. So that was a while back. Yeah, I was trying to remember what's it. So just as a joke, I didn't actually cyberbully anyone. Everybody's like, he was a cyberbully? No. So basically what happens is you remember the NetSuite assignments? Remember the NetSuite assignments that had the fake emails associated with it? I posted those online because I wanted people to actually, or in class, I posted so people could see it so they could see what their login was. I got a message from Facebook says you posted personal information for students, and yeah, that's a violation of our cyberbullying protocols. And I'm like, no, I didn't. These are fake email addresses. I didn't post anything. And I actually appealed to YouTube and got a response, an automated response, like 5 minutes later, says, no, you broke the rules. Don't do it again. And so, yeah, I'm just paranoid about cyberbullying now. It's like if I put personal information up there, everybody's going to go through a pandemonium. I'm worried that I'm going to post this one, even though I deliberately tried to avoid posting anybody's names up here, that they're going to throw a fit. Says, yeah, you're exposing personal identifiable information, and now they're going to get hit with spam all over the place. It's like I didn't post anything. It's like if they'd sent it to those NetSuite email addresses, they would have gotten a no actual email address. No, they weren't real. They weren't real email addresses. I tried to explain that to YouTube, and nobody actually read the email. It was an automated email. It pisses me off. All right. I'm done with ranting. Let's go ahead and get on to assignment. All right. So human resources management process. So this is pretty straightforward and basic. This is definitely going to be a lot less focused than the revenue process. Revenue and purchasing, as I said, within the stuff that we're talking about, those are the top two. Okay, those are the ones to focus on. When we start talking about a little bit more, chapter 16, which we're going to talk about next week, is probably number 3. And then the other ones are kind of all tied for last, I would say. So what we're going to talk about today, we're going to talk about Wednesday, and then what we'll talk about next Monday. I'm not going to say they're not important. Then there's not some important takeaways, but I will say that they are going to be less focused in coverage on the exam. There will be less coverage on that. That being said, remember I told you the tables that we had to do? We've got 2 more tables this week. We got one for today and we got one for Wednesday that we're going to have to talk about. You will be responsible for knowing those. Those are the ones that relate to controls, but we'll get to that when we start talking through this. And you will notice this, the format of this lecture is a little bit different. The format of the slides, that's because I prepared these slides much later on in my time at Truman than I did the earlier slides. So there's a little bit of change in the formatting. I hope that is not too distracting, but what are we talking about? We're talking about human resource process. Well, it's establishment of sound policies for hiring, training, evaluating, counseling, promoting, compensating, and taking remedial action for employees, which sounds like a lot, but this is not an HR class, okay? I'm not teaching you all to understand all of these processes from respect to a person who's working this role in an organization. We're talking about the audit perspective. So what is the primary focus of an auditor with respect to HR? That's actually going to be what affects the financial statements, which is going to be payroll transactions. That's why this is such a short chapter, is because even though HR is a highly complex and convoluted process, and it requires somebody specialized in that area with knowledge about all of these concepts, we're not auditing that. We're not operational auditors. We're financial auditors. We're trying to actually discern what affects the financial statements. And in general, the only thing that affect financial statements from an HR perspective are going to be payroll transactions, which is why this is such a short and sweet chapter to work through. So let's go ahead and talk about kind of what are the components there. And they're basically broke down into 2 components. Our primary focus is going to be payments to employees for services rendered. That's all there is to it. And so that's going to be our primary focus to that one. So paychecks, making sure that those are properly calculated and all the concerns have been properly addressed. There are some other ones that we want to discuss. Okay, accrual and payment for payroll liabilities arising from employee services, including liability, Social Security, unemployment taxes. Basically, all the items that go on a paycheck that are related to the paycheck. This could be for additional compensation or for reductions in compensation. Now, I want to make sure that I'm clear on this because I'm going to talk about this later. I am going to focus very heavily on this first one right up here. I'm going to focus on how we're actually auditing that step right there. And then I'm going to come to an abrupt halt and the class will be over, except that I'm going to say at the very end to say, what are our approaches for this one right here? And the answer is exactly what we did up here. So we're going to actually learn how to audit both of these, but I'm going to focus on it through the lens of this one. And then I'm just going to say, how would we approach discussing part two? The answer is we do the exact same approaches that we did for part one. That's all there really is to that, okay? So payroll transactions and accounts. Payroll transactions, the accounts affected, those are pretty straightforward. We got cash, and we got the labor and expense accounts and the various related payroll liability and expense accounts. And then for the accruals, we've got the same cash accounts as well as accrual related accounts. But you will notice something that's really interesting is that I've got inventory in payroll transactions. Is that a typo? Probably not. I wouldn't include it up there. I probably would have pointed it out right away. So this is a typo, guys. Ignore that. Or I wouldn't have put it in the slides in the first place. I would have done my used my incredible Microsoft Paint skills, and I would have just deleted that. Okay, just to make sure that got rid of it. So I included there for a reason. Why is inventory up there? The answer is this is a Dr. Otero effect. Okay, this is one of those manufacturing environments where you're going to have people who have direct labor expenses, and what happens to direct labor gets capitalized as a cost of inventory. Okay. So is there a possibility that when we're auditing payroll that we could actually have inventory calculations in there? The answer is yes, we could actually have that. That being said, our focus is again on the payroll side of this. We're actually going to talk about inventory on Wednesday, and we're going to talk a little bit about how do we approach standard costs, which would include those direct labor costs. And the answer is pretty much the same way you approach them in a management or a cost accounting class. Okay, so as far as the inclusion of inventory up here, I think that it's important to note that you could have an inventory effect, but for the most part, it's not going to affect our audit of the payroll expenses. As far as documents and records go, you can kind of see here, some of these are pretty straightforward, such as the personnel records, the time cards, the timesheet, the payroll registers, the payroll master files, and the periodic payroll reports. We do have some tax effects as well as some employment forms that have to be audited as well. Generally, there's going to be source documents for later transactions, especially if we're talking about what the originating information is versus the result information. So if we want to know, did a payroll amounts get accrued properly? Do we need to know what the hourly rates are or the salaries? We would be looking at the original personnel records to determine what the wage rates or salary authorization amounts are for those. All right. Here's something that's going to be wholly unsatisfying. We're going to talk about the human resources process and the functional areas. This is not as nearly as clean a sequential process. And when we get to the segregation of duties, it's not as neat as some of the other areas, but I still think it's a valuable consideration for us to go through. So we got our operating departments. These are going to be the areas that request new employees. And so any part of the organization can say, all right, we're short of staff in this area. We need to hire somebody new. So this is going to be our request for new employees. Then we've got human resources, which their point is to basically hire those employees and to authorize their information, specifically what they're being paid. Then we've got supervision, which is going to be the departmental function, which is monitoring and approval of employee activities. And then we're also going to have timekeeping, which is processing employee activities. Payroll is going to be relating to recording the payroll transactions to make sure everybody gets paid for their work. Then cash disbursements, that's how we paid. It's important to note that we talked about cash disbursements in the purchasing process, and we said that this is a critical function. But you may note that I also use cash disbursements here, which tells you that cash disbursements is not exclusive to purchasing. It's something that we could have in multiple areas, which is both true for cash receipts and cash disbursements. I would say it's primarily focused on revenues and purchasing, cash receipts and cash disbursements effectively. But thinking about them logically, we could say that there are other sources of cash receipts and cash disbursements that may take place that are in their process areas. In some context, we could actually make the argument cash receipts and cash disbursements should be their own process areas simply because they overlap with other process areas. We're not going to focus too much on that delineation. We're just going to consider them to be a functional area of different processes, and we'll talk about the unique aspects for how they relate to those process areas. And then we have general ledger and accounting, which is our recording function. And you notice I say they're three-way match. I talked about that last week with respect to document matching. When we're doing these transactions in the area and making sure they're properly recorded, we do want to make sure that they match all the way across the record. So if we're talking about making sure that we have document matching within the payroll process, we would probably want to look at what the authorized pay amounts are at the HR levels. We would probably want to make sure that we have the time cards and recording the recorded hours. And we would want to make sure the mathematical accuracy of the payroll matches those two. So there's a possible three-way match that we can perform there. More likely, we would do that from a computerized stage, and we would actually check and make sure that there's just some sort of check figure. But for the most part, three-way match is a lot easier in this process as there are fewer documents and they contain less information than they would in purchasing or revenues. All right. So I said we were going to do it, and let's go ahead and talk about this. So first of all, let's just go ahead and really talk quickly about which of these are processes that are unique to human resources. So the only process or the only functional areas that are unique to human resources are going to be human resources and payroll. These are isolated specifically to the human resources function or process area, those two functions. Operating departments, obviously, they operate within all parts of the organization. Supervision is going to be within those operating departments. Timekeeping will take place in those operating departments. Cash disbursements, we just talked about how that overlaps in different process areas. And then general ledger accounting, those are going to be at the entity level. So basically, we only have two that are going to be specifically focused within this area. But for that purpose, let's go ahead and talk about the functional areas. Again, this is segregation of duties. Remember, this is not a perfect segregation of duties. We're not going to be able to say that if something occurs in one functional area, only that should occur in the functional area. There may be some scenarios where we find that recording and authorization occur within the same function. But for a mark context, we would like to kind of isolate this to the majority of our functions. Going to be functional responsibility will be that in a given area. So we're talking about operating departments requesting new employees. What do we think? Do we think this is custody, authorization, or recording? Probably a recording function. It's like our purchase requisition function back in purchasing. It's basically we make a request. We make a formal request for something. So we're making a recording of that request. Then human resources. This one's a little bit more straightforward. They hire the new employees and authorize their pay. What do you guys think? Is that custody, authorization, or recording? Yeah, I'm going to say authorization, okay? Because the authorization of the transactions, yeah. So go there. All right. Supervision and approval of employee activities. What do you guys think on that one? So approval, probably another word for authorization. Now you may say that we have two authorization steps in a row, but keep in mind this is unique to human resources process, whereas supervision occurs at the departmental level. So we're two different locations where authorization is occurring. Timekeeping, okay, that's a departmental function, but this is where we're processing employee activity. That's where we take their hours and make sure that they get properly denoted in our records. What's another word for what I'm trying to dance around here? Recording. This is a recording step. Okay, we're recording employee activity, processing employee activity. Then payroll. Okay, this is a little bit more straightforward. We're recording payroll transactions. I didn't even try to hide that one right there. We got a recording function. Okay. Again, here you will notice these are both recording functions. You may say, "What the heck, Dr. Barnes? Why do we have recording functions?" Again, this is a departmental function. This is a human resources function. So there's not an overlap in their responsibilities there. And then cash disbursements. Well, we already know that when cash is an asset. So this is going to be our loan custody is our loan custody function here. Okay, so that's where we actually get the resources to actually pay our employees. So we have those cash disbursements. And then general ledger accounting, those are just recording at the organizational level. I don't know. Honestly, I don't encounter very often where we have some sort of subsidiary ledger recording for the payroll level. Could there be a payroll subsidiary ledger in an organization? Absolutely, but it doesn't seem that it would be a necessity. I guess you could make the argument that unit payroll could actually be viewed as a subsidiary level of recording. Regardless here, for our purposes, we're just going to say this occurs at the entity level. And this is our recording function for that. All right, again, not a perfect analysis. It gets even more muddled once we get to the inventory process on Wednesday, but let's go ahead and talk about it. Well, we're moving on to our inherent risk assessment. So inherent risk assessment is basically saying, what are some concerns we have with respect to human resource process? And there's actually a lot of them. There's actually quite a few that we need to be considerate of. So economic conditions. So what are the economic conditions operating in? So, for example, minimum wage laws, that's actually on the ballot for Missouri, by the way, coming up tomorrow for the election is whether or not to raise the minimum wage. Anybody noted that? Everybody found that? Yeah. So that might affect you if you decide to work a summer job, or you don't you're not going on to an internship and just instead going to go work at I don't know, Taco Bell seems like a wonderful place to work over the summer. Yeah. I don't know. Everybody enjoys eating at Taco Bell. Why wouldn't you enjoy working there? Come on now. All right. Yeah, all right. I guess we're having some discussion with Walmart too, although Walmart tends to be actually above the minimum wage requirements. So that's probably not going to affect them as much. Another economic condition we could talk about is something that's happened 4 years ago. Remember the pandemic? Yeah, there was actually inflated wages at the time because they couldn't hire anybody at the normal wages because everybody was getting these disbursements from the U.S. government saying, "Hey, we're just going to pay you $1,000 in a stimulus check," and they did that I think 3 different times. And so trying to hire people when they're getting free money from the government in Kirksville, Missouri is a challenge. So they actually inflated the wages of many places to $15. So economic conditions can actually be affected by external conditions as well. Supply of skilled workers, if you're talking about certain skill set that's required, this is something that can actually affect the human resource process and hiring. Believe it or not, your careers that you're moving on to, this is certainly a problem right now. There's a lot of discussion about there's a lower supply of accounting graduates. So the good news is that's increasing the salaries, the starting salaries of many people right now. The bad news is probably not as much as we would like to see. We would like to all see get paid 6 figures when you graduate. We're still working on that. We're trying really hard to get you to that point. Then we have the rate of employee turnover. This is also something that's very relevant to accounting, unfortunately, is that a lot of people start out in public accounting and they go and move into other industries. If you have a high employee turnover, then that's going to be a risk to an organization because that means that you have to have a corresponding recovery of that turnover. This also occurs in other jobs, especially in restaurant and retail industries. So we were talking about Taco Bell and Walmart. This is another concern for both of those entities. So labor contracts, this occurs more for specialized labor situations, particularly if we're talking about contractual agreements for responsibilities. This can actually work in favor of an organization or against an organization. It can work in favor if we have people who are not really wanting to do the work, but they're required to do so by contract. On the other hand, if you're contracted to employ somebody for 40 hours a week and you don't have 40 hours of work with them, it doesn't matter. You still have to pay them for that 40 hours. So labor contracts can actually be a boon or a curse, depending on the scenario. Organized labor or unions. Well, we're seeing a little bit of that going on right now with our friend Boeing over in St. Louis. They're having some problems with their organized labor going on right now. So organized labor basically means that there's bargaining power of the employees, which is definitely a good thing, but it can lead to some inconsistency in performance. It does represent an organizational risk, particularly if the organized labor groups or the unions do not agree with what the terms are of employment. So, and again, something to keep in mind. And then probably are one of the ones that's fairly obvious, but doesn't go without saying is going to be our government regulations. Governmental regulation can actually dictate how agreements work. This is particularly with respect to worker safety and worker environmental operating conditions. The amount of work and labor that's performed can actually be affected by the governmental rules within a particular area, especially if we're talking about hazardous working conditions. Anyway, all of these can actually be things that affect the risk of organization. Increases in some concerns can actually affect how the risks that an environment operates in. And as we know, risks are a primary concern for many organizations because that's going to dictate the operating environment they work within. That being said, we have responses to risk, which are going to be our controls. So we're still on a reliance strategy. Sorry, guys. We're not to substantive strategy yet. Okay. I promise it's coming next week. It's next week. Okay. Why are we doing a reliance strategy for this? Because in most organizations, there's going to be multiple payroll transactions per year, and they're going to be for a large number of workers. So it's not really feasible to audit every single one of the transactions. Now, if we're talking about a small organization, if this is not a non-public company, like a non-global company or like operating like a regional firm, I could probably audit all the payroll transactions at Greek Cordilleras that take place over a year. To my knowledge, there's only 3 people that work there on a regular basis, and if they get paid, once a week, so that's three times a month, so 4, so 52 weeks. That's 156 payroll transactions, which I could audit those. That would be fine. Okay, but we're talking about something in the thousands or millions. We're probably going to rely more on sampling, which means that we're probably going to rely on controls as well. And so That's going to be the planning, performing tested controls on payroll transactions, and documenting risk for the human resource management process. So as before, we have tables. This one's going to be table 12-5. On page 428 of the Messier letter product text is going to be showing a summary of relative assertions, possible misstatements, control activities, and testing controls. But at this point, our focus should be on understanding the association between all of these rather than trying to memorize the table. And we already have a context for that. Remember, we have our control sequence. So risks associated with management assertion, those dictate what the control will be. And then we as auditors have to establish the test of controls. That's the table format. And that's, again, what you need to be focused on when approaching these particular questions. We're going to walk through another example, but like I said, we're not going to walk through every scenario. So this is table number 5 of the 6 tables that I said you needed to look at in preparation for the exam. Again, you do not need to memorize the table. Your focus should not be on trying to memorize every single relevant possible concern, every single possible risk for every single assertion. It should be more about the understanding the linkages between how we address risk, how we assign the management assertions to those risks, how the controls are created in response to risk, and what we do to test those controls. If you have a basic understanding, then that'll preempt, that will go past trying to memorize this. So again, don't focus on memorizing, but focus on understanding. All right. So let's go ahead and talk about completeness. Why completeness? Well, if we're talking about payroll, that represents a liability in many organizations, or at least an expense at some point. Might an organization want to understate their payroll liability? Yeah, if they understate their payroll liability, they're going to understate the corresponding payroll expense. What happens when a company underreports its expenses? What happens to their income? It goes up. So underreporting is a real concern with respect to liabilities and expenses. So employee work is performed, but does not get recorded. Can we say that this misstatement is associated with this particular assertion? So when you look at this misstatement, are you just going to say, does that represent completeness? Well, completeness is our recording assertion, making sure everything gets recorded. So if something got performed, that means it exists, but it did not get recorded. So this sure sounds like completeness from our basic understanding. So we have here a risk with associated assertion. What would be an easy, practical way to make sure that if employee work got performed, but did not get recorded, we could find out, we could figure this out? What would be an easy way? So there's certain documents that get associated with employee work, okay? Some of you may actually have those. You probably have time cards that we work in, or timesheets as you punch in those. So let's go ahead and assume we're using timesheets. Those are going to be numbered documents that we could actually use and check sequential work on those. So an example of that, if we're using timesheets, making sure that they're using sequentially numbered time cards or timesheets to identify those. And then when we look and see the transactions taking place, if we see a gap in the sequence, either for time cards, like employee number 153 reported, employee number 154 reported, employee number 156, whereas employee number 155. Now, it could be that employee was terminated. It could also be that employee had their work performed, but did not get recorded within the system. So we want to figure out why the reason that one is, why that's missing. Same thing for timesheets. Those are sequential for a reason, so we can actually identify gaps and make sure that that any gaps do get recorded. And then finally, table tester controls. We want to verify the numerical sequence of time cards or timesheets. So if they say that their control is to use numeric time cards and timesheets, we want to inspect those documents to make sure, those accounting documents to make sure that that's actually the case. So if we go and we check in the numerical sequence of time cards and timesheets, and we check and see that those are actually being used in the system, we have some strong evidence that completeness is being followed up on, that it's unlikely that a transaction will get recorded or will take place without being recorded because there's a sequential check. Now, probably want to do some additional test work on this. I would venture to say that if there's a gap, we want to find out what is the process for figuring out or for resolving gaps in that. Like there should be an exception report, and then there's a follow-up on that. So there would be additional steps here, but that's initial inspection of records and documents to determine if there's a numerical sequence in that taking place. That would be sufficient for a starting point. All right, so that's an example of the walkthrough for control risk with respect to payroll. We only have one for this example, but again, please make sure you review the table so you understand what's happening here. All right, so determining detection risk. So during risk assessment, auditor establishes assess control risk. We already know that. Following tested controls, we're going to establish achieve control risk. This is what we believe controls to be before we test controls. This is what we think control risk is after we test controls, and those can be different, okay? So if those change, that is going to affect our detection risk, which is going to affect the scope of our substantive procedures. So what happens to detection risk if achieved control risk is the same as assessed control risk? The answer is nothing. Nothing changes in detection risk. But what happens if control risk is the same, or the achieved control risk is higher than the assessed control risk? So we said our assessment of control risk initially was moderate. We did testing, the controls were not good. So we reset control risk higher. What happens to detection risk when control risk is higher, assuming that there was no change in inherent risk? Probably goes down. Detection risk goes down. Do we like detection risk going down? We don't like low detection risk. Low detection risk is a bad thing because we can't tolerate a lot of risk. So that will affect our substantive procedures. That may come up though, because we may have scenarios where the controls are not as effective as we'd like, which would increase the scope of our substantive testing. So let's talk a little bit about substantive testing and what are some things that we would do in this area. We have substantive analytical procedures, okay? Again, I will tell you right now that there's a little bit more likelihood that we could use a model in analytical procedures for payroll testing. It's definitely going to be more of a possibility, particularly if we have a smaller organization. We could actually develop a model for determining what payroll expenses are. Especially, we could actually develop a model for payroll related liabilities. So let's think about that for a second. If I were to say, I know what my total payroll is to the organization, could I develop an expectation for my Social Security Social Security expenses for that period? Yes, because we know that Social Security expenses are a percentage of gross pay. So if I know what those numbers are, then I can actually just develop an expectation. So I will say that for payroll related accrual accounts, the reasonableness analysis, those model expectations, those are certainly more viable than they were for revenues or purchases. But looking at this table right here, all these examples that I provided, you will notice that these are still mostly just trend analysis and comparisons, okay? Comparing to previous periods, also comparing to external information. So labor utilization rates and statistics with industry data, trying to confirm that what the organization has is consistent with the industry. This is an interesting one. So one thing that we might note is that trend analysis will look at prior years and see any changes over time. Industry analysis is one that we can actually look and see what's going on within the company's industry, our client's industry, and make comparisons. Can this be valuable? Absolutely. There's a company you may know called Enron, okay, that was having massive gross profit spikes over time. And this was during a period where all of the other competitors in the industry were suffering massively because it was right around the internet bubble. So all the energy utilization industries that were in, or companies that were in that industry at the time were suffering losses, and Enron is posting record profits. Should that have been a clue when comparing one company within the industry to the rest of the industry? Probably so. We can do the same thing. We could actually do that for both revenue and purchasing, though it's less relevant there because there tends to be operational efficiencies that are achieved. But with respect to payroll, we're talking about labor utilization. We're talking about payroll costs as a percentage of sales. Those should all be fairly consistent with what the industry sees, which is, again, something that you'll be doing as a part of your analysis for the Excel assignment coming up. Yeah, so again, still a heavy focus on our ratio analysis and our trend analysis, but there's still some opportunities here for utilizing reasonableness analysis here, especially if we have a strong expectation of what we think the number should be. So we can actually test the reasonableness down here, which is great. All right. Let's go ahead and talk about some substantive testing. I decided to do something a little bit different for this one. I'm going to give you some procedures and you can tell me what assertions being tested here. All right. So examine a sample of payroll checks for proper classification to expense accounts. I didn't make that one very hard. What do you guys think? What assertion we got? Yeah, classification is kind of given in the question. All right. Compare a sample of timesheets before and after period into the appropriate payroll report. Yeah, it's cut off. Okay, it's cut off. Good. That was Olivia. Recompute a sample of payroll checks for gross pay deductions and net pay. Yeah, it's VAA. Yeah, it's VAA. Trace a sample of timesheets to the payroll register. So let's just actually take a moment to figure out, is tracing being used correctly here? So we're talking about timesheets, which are going to be a source document to what goes in the system. Okay, so we're moving from bottom to top. Is that correct direction for tracing? Yes, that's a T. All right, so if tracing is being used correctly, this is what test? And completeness. All right. And then vouch a sample of payroll checks to the master employee list to verify validity. Same test. Let's just make sure. So payroll checks are going to be a source document, but they're going to go down to looking at what the original reference was within the HR system to make sure that they're actually getting paid the amount that they say they're recording to be paid. So we're going from source to a lower source, okay? So we're moving down, is that vouching? Yeah, it's vouching, okay? So what is this going to be? Existence occurrence, good, good, all right. All right, that was fun, let's do some more. What do you guys say? All right. Search for unrecorded liabilities, didn't we do that already? So how did I dare I throw this in here? Okay, we've already done this one time. It's like I'm double dipping. So is it possible that you could have a payroll related liability that doesn't get recorded? Yeah. So how would we test that? How we did it back in purchasing is we said we looked at the vendor balances and then we looked at subsequent cash disbursements. And if there was a disparity between those, we'd investigate, say maybe there was a payment that was made for a liability that never got recorded. So what if we forget to record a salaries payable? Would a search for unrecorded liabilities in a similar manner help us identify that? Certainly. We look and see what the current salaries payable are for each employee, and then we look at the payments for each of these employees after period end. And we say that Dr. Barnes was supposed to get paid $500 and instead he got paid $100 billion, okay? I deliberately exaggerated those other numbers because I will never ever own $100 billion in my life, but we'd say, okay, why was there such a massive overpayment? And their justification could be that Dr. Barnes is just that deserving of payment. Or you'd say that there was a liability for Dr. Barnes. He's been blackmailing the company for a long time, and so we've had to pay him off, which I can only hope to actually get to that level of blackmail at some point in my career. So anyway, search for unrecorded liabilities. What assertion did that test back in purchasing? That was completeness. That was checking, making sure that something gets recorded. Because remember, it's completeness of the recording assertion. We're checking to see if something did not get recorded properly. All right. Batch selected amounts from account schedules to accruals to supporting documents. So payroll, tax returns, corporate benefit policies, etc. All right. Let's see. So move from account schedules to supporting documents. Okay. So we're starting with a series of subsequent documents and moving down to source documents. So we're moving down. Is that vouching? Yep, so this would be a test of what? EO, existing occurrence. Obtain an account analysis schedule for accrued payroll liabilities, split schedules and for accrued payroll liabilities and compare amounts accrued, supporting documentation, such as payroll tax returns. That's a lot, all mathy, all very mathy stuff. What are we talking about here? VAA, okay. And to review supporting documentation to determine that the entity is legally obligated to pay the liability. Yeah, that obligation kind of gave it away, rights and obligations. By the way, just a few notes here. I wanted to make a note. So the previous slide that I just showed you was actually transactions and events assertions. This is account balance assertions. Again, both of these can be tested as part of substantive procedures, but there is a little bit of separation in the philosophy of testing. Where with transactions and events, we're trying to determine day-to-day operation correctness. When we're talking about account balances, we're trying to determine that the financial statement information is accurate. Okay, so that's the separation there. Also, there's an interesting word that comes up here. So foot schedules, okay? So foot is being used as a verb. What does that mean? So foot is basically a fancy or a shorthand term, not fancy, it's not fancy at all. A shorthand term for verifying mathematical accuracy. So just adding numbers together to make sure they add up together. And so an interesting story back when auditing before computers, that was what auditors did. They did a lot of footing. They would take long lists of numbers and put them on a adding machine and add them together to make sure they're accurate. So that was the skill set that you all needed to have like 50 years ago, okay, which was a much simpler time, but a lot more boring as well. So, all right. Last concept to discuss here. So the information in the previous slides focused on testing a payroll, which is something I told you we're going to talk about. Auditing of payroll liabilities would follow similar testing procedures, though there is usually more focus on controls testing due to the subjective nature of liability estimates. So if we're talking about subjectivity, we want to make sure that we have a critical assessment of the processes listed down. So we would actually focus a little bit more on controls testing. Also, as I mentioned, when we talk about accrual of payroll liabilities or auditing payroll liabilities, there's more of an opportunity to get do reasonableness analysis or model development in substantive procedures to get an estimate of those. So there is a slight difference, but for the most part, the procedures that we've learned from the previous slides would be useful for subsequent testing of this area as well. And yeah, like I said, that's it. It's only 6 minutes, but I gave you 6 minutes early. All right. So have a wonderful day. I'll see you all on Wednesday.